Good morning. Welcome to Mornings with Michael. Welcome to the weekend. It is Sunday, July 28th, and we start our show as we start every show. We looked at crypto, what crypto is doing. There's a crypto conference going on. It's still maybe going on this weekend. Maybe it has concluded, but this is where Bitcoin is right now, 68,134. See, it's come up quite a bit, bumps around, and we'll just see where it goes to tomorrow. They just approved the Ethereum ETF, so we'll take a look at that right here. Like I said on my show this week, they did have a dividend, so to speak, that they gave equal amount of. So if you had shares in the Ethereum Trust, you got as many shares of the dividend. I think it was 15 cents worth, and it's currently trading around $3. So that was a nice boost for anybody who had the Ethereum in their portfolio. So that is the story there. Let us go to our PowerPoint presentation. Coriaceous is our word of the day, resembling or having the texture of leather. Vegan leather can still have a coriaceous feel to it. Here we go. Just want to share this book. This is my favorite book that I've ever read on investing. Reminiscences of a Stock Operator, largely on Edwin Lefebvre. Since we're in France for the Olympics, might as well go with a French sounding name. His recordings or his conversations with Jesse Livermore, considered the greatest stock trader of all time, on his ideas. Every trader's techniques have pretty much been based upon. So that is that. Let us go now to what happened last week. This is the Dow Jones Industrial Average. We got a bullish engulfing right here. It engulfed one or more moves from the previous week and filled this gap. And we go down here. It's the volume has been declining, but we have a bend on the stochastics, and this CCI, Commodity Channel Index, is turned into bullish area. So we think that we're going to have at least one more day bullish action. And I'm going to bring up, we think this is going to go, I think this is going to pull back eventually to here to the moving average. And that is going to be at 395.69. So we're moving on up. This is kind of what it looks like. It's pulled back to the moving average. This is an inverted hammer as it rebounds here. Had a strong volume over here, and got a lower volume here, but it is showing some bullish activity there. So what we try to do is we try to look at the psychology of a lot of traders, and this is what the candlesticks do. They show the majority of the mindset of the traders and where it has moved. These are fairly accurate predictors of what is going to happen in the market. So we move on to the IWM, which has been the strongest portion of the market. Looks like we got a hanging man candle right here. We can go back here. This is the last time we had a hanging man candle. We kind of can see what has happened after that. And we can see this in the example as well. So I think this is going to pull back a little bit. Screen has gone dark, but we think this is going to pull back to 208.58 is kind of the target right around here. We talked about this last week, I believe, pulling back to kind of fill this gap over here. This is one gap that's already filled, and we think there's an 80% chance of this gap to be filled, and often there is a 50% retracement in big moves like that. So on to the NASDAQ. NASDAQ has come down quite a bit. What do we have here? It's under the moving averages by quite a margin. We have a green volume indicator right here. We look like we got to move in stochastics. We definitely got to move pretty close to the green bullish line here. I think it's going to cross, and we think it's going to come up here, but it's probably going to get turned away from the moving average. And having a further look, what do we see down here? We got a pattern here, B to C to D. We talked about this kind of movement before. So that's what we got in the NASDAQ. And we have a very similar movement in the S&P 500. We have many of the same stocks, so it wouldn't be surprising to see that. So came up to this target line. So we got the A, we got the B, the C, and now the D, and now it's kind of bouncing here. So I think I'm going to get some positive movement here. You can definitely see the CCI has got a bounce right up to the bullish green line. And Donald Lambert in 1980 created a commodity channel index. And what is it? The indicator has grown in popularity and has become very common for traders to identify cyclical trends, not only in commodities, but also in equities and currencies. The CCI, Commodity Channel Index, can be adjusted to the time frame of the market traded on by changing the averaging period. So that is a story there. Here is volatility index, or the VIX. Hit the target of 1838, went quite above it, got into the 19s, pulling back here, and think it's going to pull back a little bit more. And our target is 15. Let's see where, put that 1523 target right here, where a little red line, the little red line is. It's a huge amount above the moving average, so this should draw it back. Looks like we've got an angle on the stochastics, and we got a definite angle. It looks like it's getting ready to cross into the bearish territory here. So there we go. Here we got the news. Peter Schiff warns of a potential market crash. Small cap stocks see major investment and more. And this week in economics, we can see that we had a big rotation. We even had a new word come out. I believe it was rotation, which meant a fake rotation, but we definitely got a rotation now in small capitalization stocks. A lot of savings and loan banks had big earnings, and their stocks are moving up, and our REITs are moving up as well, and real estate and small savings and loan banks with a drop in interest rates would be favorable. But most of those banks, we may take a look at them later. They're severely stretched, so that is the story there. But there doesn't seem to be a rotation from US to international equities. We've got the longest stretch in past history of it going up without moving into the international treasuries. That may change, so we'll just continue to watch out. We had the Nifty 50 back here around 1965, the internet bubble in the 2000s, and this is where we are today. So moving on, this is a pretty interesting chart, thanks to Carson Investment Research and Market Surge. Stocks don't seem to like lame duck election years. Good thing 24 isn't one, or you could say it is one. So this is what happens. We have a sell-off in October, usually starts in September. You can see a little hook over here, and then it resolves itself once a new president is being ready to be installed. So keep a lookout there. And just look at these numbers. It's going to cost every citizen in the United States at least 103,000, and this is growing by the second. So if you want to go take a look at this, you Just look up usdebtclock.org. National debt is getting very close to 35,000. I don't think this is ever going to be taken care of in our lifetime. And it just gets worse and worse, like a bunch of drunken sailors who can't spend their money fast enough. So this is kind of what we are looking at here. This is the Federal Reserve looking at rising inventory in the real estate holdings. You can just see this rise. And then around January, they start to sell again. They rise. It gets even higher. And then it resolves some of itself, but it is still, as you can see, still higher than it was before. And this is currently where we are. A lot of people aren't buying. Some of the reason is interest rates are very high. They're waiting for interest rates to lower. That some of the less experienced real estate advisors, salespeople, are having trouble to sell, and maybe they're not as good to building relationships with some of their clients, so they just give up, and you have fewer of those insurance agents in the business, and so kind of left for the people who have a long history of being in the real estate market and understand how to continually build relationships with their clients. And this is showing how inventory is just kind of building. This started in 2021. We're starting to cycle to numbers that we haven't seen in a long time. So real estate is kind of a barometer of the overall economy. And so this is something that you just want to be aware of. So that is the story with our PowerPoint presentation. We got a little shorter one this week. And now let us go over and take a look where we ended today. Just refresh our heat map. Got a little bounce in technology. Eli Lilly pulling back a little bit. Amazon and Meta bouncing a little bit. Industrials are up, real estate. Energy was up and then pulled back. Utilities, basic materials, healthcare continues to do well. Biotech, healthcare are two areas of strength, and the financials are another area of pretty good strength as we continue to see a sell-off in the NASDAQ and the S&P 500. So let's go over and take a look at some charts. This is one in the health area. This is something to definitely keep on your watch list. This is a new IPO, fourth largest privately held operator of hospitals and provider of healthcare services in the United States, Ardent Healthcare. It looks like it is making money. Their earnings previously came out at 533% earnings, 19 cents compared to 3 cents the prior year quarter. I'm going to take a look at silver. Silver is pulling back a little bit. We're just looking for this gap right around 23. And see if it can fill that. And then we have a couple of gaps that needs to fill on the way up. So we'll see if that can move in that direction. Gold. Gold has a number of gaps as well. It looks like it filled most of this one. Got a gap down here and a gap up. Copper. Kind of finish the week flat. Uranium. Got a little bit of a bounce. See where our bond yields. Bond yields are trending down. It's getting pretty close to filling the gap. at 4.2%. There'll probably be a lot of auto refinancing, refinancing of mortgages if the Fed does lower rates. So something to look forward to. Here is a 20-year loan. Looked at the VIX, S&P, and all the other indexes. Got a little bit of a bounce here in our financials. Regional banking really taking off here. Here's our S&P banks really taking off. I'm just going to pause for a moment here. So we're going to run through these and just kind of take a look at some of these regional banks. They broke out over here and really hit the profit zone. Their earnings were only down 11%. So that apparently has thrilled investors. So that has really taken off. Columbia banking system. Look at that big move. Their earnings were down 11%, and they just shot quite up over 11.5% as of Friday. Synovus Financial. At this move, it's right into the profit zone, up 17%. So all of these are stretch. Would recommend investing in them, but it is maybe something to take a look at. Zions Bancorp. Got a nice gap up here, held the gap, and is moving higher. Citizens Financial Group. Had a little bit of a pullback, only off a penny, but look at this nice move. East West Bancorp. We got institutional ants buying up here at the top, which we've shown before. It's usually at a top, usually at a topping point, pulls back somewhat. It's not an area it suggests buying. Truist Financial. Up 0.68%. Valley Bancorp. This is a little more uneven. Their earnings are not quite as stellar as some of the other people were. It was down 54%. Webster Financial. Working on a base. Their earnings were down 32%. MTB. They're down 26, but it is continuing going up 12% from the pivot. So we just went into the top holdings and I went through the KRE banks. So there you can see that that's one strength of the market. Got some, you could look at some of the REITs or another area that you may look. So let's just continue going through our sector funds. A little bit of a bounce in XLC. Utilities. I think this is an area you may want to take a look at. We did take a stab at Southern. Got into the pivot area. It's trading pretty tightly here. Wondering if this is VCP, volatility contraction pattern. Also had one right about here before it got into the pivot. One you could look at is Duke. It has broken out of the pivot, just continues moving higher. This is one up in the upper Midwest, just broke into the pit area, up 3%. Earnings are in 8 days. That is one worrying point. Real estate, what you could do is you could go and just take a look at XLRE. Just pull that up here. AMT. Looks like they're breaking out. This one is not doing quite as well. Well Tower has broken out before. Realty Income, working on some pretty tight closes right over here. Might be some, so you can take a little bit deeper dive into that area. Let's see, take a look at a couple more. Chronic Castle working on a base. Extra Storage off into the pivot area. So let's see, Public Storage working on a base. So that is that area. Move into healthcare. Eli Lilly, of course, is a big holding in healthcare. It is pulling back, so maybe working on a base. United Healthcare looks kind of extended right here. Johnson & Johnson. Looks like it's breaking out right over here. Merck, I believe they just broke out. Merck, I guess they tried to break out into this pivot and now is pulled back. AbbVie is broken out of a pivot. Thermo Fisher, the Bay Area company, is broken out of a pivot on a double bottom base. Abbott Laboratories, still working on a base. Amgen, I think, has been the leader of this group. Danaher and Pfizer. So these are the top holdings in this area. This is the biotech. If we can, maybe we'll bring in the XBI. We'll look at XBI on this one. Looks like it's getting ready to break out of the base. This one is pulling back a little bit, Sarepta Therapeutics. This one is a bit stretched, United Therapeutics. Alnylam Pharmaceuticals. Got a lot of institutional buying over here, pulled back to the 20-day moving average. Maybe this is something you want to put on your watch list. Gilead. Gilead is finally starting to move after this long cup forming, got above its 200-day moving average. We still got Amgen, AbbVie, Regeneron, broken out of the base. Exact Sciences is still trying to bottom. Biogen had a tough week as they gapped down on Friday. And BioMarin is still kind of working on a consolidation below the 200-day. So that looks and let's just keep on moving on. Building materials, another area that's starting to firm up, looks good. Home builders, breaking out right over here, broke out of this little tight area. The real estate and home builders kind of moving along together. Everybody hopes for rate cut. FANG. This is a note that seeks to track the return of the New York Stock Exchange FANG index. Facebook, Amazon, Netflix, Google, plus NVIDIA, Microsoft, Apple. So it is falling. So if anything, I would just continue to watch this and see if that market crash comes to fruition. So that is the story there. Semiconductors continue to struggle. Infrastructure development is a double bottom base. Try to move into the pivot here. It's developing a handle. Looks like it's moving up. Jet continues to pull back. Leisure activity pulling back. Solar, a little bit of a bounce there. Just continue to watch that. Energy is starting to look good. It's pulled back 1, 2, usually the third time. A lot of times it's able to break through. And this is where we're going to leave it for today. This has been Mornings with Michael for information and educational purposes only. This has been our weekend update. Hope everybody has a great weekend, and we'll catch you Monday morning. Have a great one.